Hey, everybody. Welcome to the Jay Young Show, or welcome back, I guess, to the Jay Young Show. This is episode, 183, 4, 5, something like that. We need to get the number, but when we get it, we'll get it to you. But anyway, Jay Young here. My co-host, Jordan Soto, is coming along. She'll be here in just a second. But in the meantime, Rob Thummel, he's a senior portfolio manager at Tortoise Capital. Rob, welcome to the show.
Hey, thanks for having me, Jay.
Absolutely. We started talking before, and I'm like, I'm not sure when Jordan's going to be here, and I'm tired. I need to tell you some of the things that we're talking about on air. You know, some of the best discussions I've ever had happened before the show, and we just keep talking and talking and talking. It's like you get on the show, and you're like, well, we've already talked about that. And what did we talk? So anyway. I'm really glad that you're here, and I want to know more about you and about what's going on. And it's an incredible what you guys do, and you're in energy finance, and you've been with Tortoise since 2004. You said you've been in it for 30 years, and you've been on many different networks, CNBC, Wall Street Journal, all these different places, Fox Business. So tell me a little bit about yourself and how you got into energy finance.
Sure, Jay. No, thanks, and it's nice to meet everybody. So I grew up in a small town in the middle of Kansas. I'm in Kansas City. I've been in Kansas City for a long time, and I grew up in a small town. I started working at a gas station. I think it might have been an old Standard gas station when you actually pumped your own gas, and I did that for a series of years as a young high schooler. Did everything in the I didn't drill for oil wells, but I filled up gas tanks and washed windows and washed cars and changed oil and tires and really got my hands dirty. And then I decided I probably was better fit to do something else other than that. Although that's a great occupation. I went to Kansas State, got an accounting degree, and shortly after a short stint at Ernst Young, I got involved in a small private equity firm here in Kansas City. And we started we had a subsidiary that was doing oil and gas drilling. And it was really kind of interesting. This was pre-shale. And so not many people probably remember what it was like drilling for oil and gas in pre-shale, but the odds of drilling a dry hole were high. And the odds of drilling a successful well were, relatively low. So I was just a finance guy. I worked with a lot of reservoir engineers, and geologists, and we were drilling some wells in South Texas. And then, interestingly enough, we were drilling a well. I believe it was in Montana, and we were drilling it, but we were getting nothing out of it. It appeared to be another dry hole. We kept putting money into it, and finally, somebody came back. One of the members of the management team came to us and said, "Okay, you're no longer going to finance this oil and gas project anymore in Montana." We said, "Okay, that's fine." Went back to the operator, we were a non-operating interest in it, but went back to the operator. The operator said, "You know what? Okay, we get it. We're going to actually give you your money back in a 10% return." And I thought, well, this is great. We never got a dollar out of this. Well, long story short, where I'm going with this is that well was operated. That partner was Lyco Energy, and I think they drilled one of the first wells in the Bakken Shale. And Lyco and Bobby Lyle and his team went on to be very successful, sold the company for hundreds of millions of dollars to Interplus, and now that kind of catapulted me into where I am today. I'm not an operator of oil and gas wells, but I'm an investor in the whole entire energy sector. And I started here at Tortoise, as you highlighted, Jay, 2004. I've been here 21 years. And probably looked at or invested in every single IPO in the last 21 years in the energy sector, and it's been an exciting time.
Wow. So what you were saying a minute ago about investing in wells and all that. So you were the banker. You were the banker that was investing in the well, or with Tortoise Capital and the previous company. You didn't own the company, or you weren't the oil and gas. You were just financing it.
Exactly. And it was a previous company. It wasn't a Tortoise, but we were just a non-operating equity owner in a joint venture with a company called Lyco Energy. So, and I was working for that company, and so I was the finance guy basically for that company.
Okay. I know Bobby very well, very well. He's an Eagle Scout, and me and him are on the board together on Eagle Scouts here in Dallas. And an incredible guy. The Lyco with the name of his company, Bobby Lyle. And matter of fact, I need to write down here to be sure I get back with him today, and I'll call him and say hello. You're only as good as your network sometimes. And Bobby is an incredible genius, made money in real estate and also in oil and gas, and he's a super guy. But, Lyle School of Engineering here at SMU, made some money. He's he's given back. No telling how much money he's given back. So, he made a lot of success in the Bakken. And I hired his geologists and his engineers a few years ago after he sold out, because I asked him, I said, hey, well, who's on your team of people? And he told me, and I said, hey, do you mind if I hire him? He goes, no, I'm retired. I'm out. And so I hired one of his engineers and also one of his geologists for a while, which worked out good. So good times. But you're talking about Tortoise Investments, and I'm just trying to think, what kind of deals are you doing now, or what kind of deals is Tortoise doing now?
Yeah, Jay. So what we do at Tortoise is we offer publicly traded portfolios, so mutual funds. So at Tortoise, we have a closed-end mutual fund. We have about 4 ETFs that are what we call active ETFs, a couple passive ETFs, and then an open-end mutual fund, and that's kind of our flagship. And so we invest in all, and what we're investing in all of those entities or those investment products are publicly traded companies, so energy infrastructure companies, oil and gas producers in the U.S. The most recent thing that we started investing in is Tortoise Capital AI Infrastructure Fund. We're investing in AI infrastructure, so the electricity actually that's generating the electricity to the data centers that are generating that are producing the AI, and then all of the hardware inside of these data centers, including things like companies that produce air conditioners and data storage devices and network switches and things like that. So we do a little bit of everything, but it's all centered on how important energy is to really the entire world, but especially to the U.S. and the development of the economy tied to how energy is produced, and the fact that the U.S. is is the largest producer of oil and gas in the world, but also one of the lowest cost producers of oil and gas in the world as well.
Right. Yeah, that makes sense. What is when you say you're investing in AI, how does a company invest in AI, or are you putting money into private stocks, public stocks, or how do you find out how to do that?
Yeah, no, that's a good point, Jay. So while we study, so we're investing in what I'll call the infrastructure of AI. So all the applications, we've all probably used ChatGPT, and you hear about all these other chatbots that everybody's using, and there's just new AI applications all the time that are being developed, and a lot of those are being developed by what I'll call the mega cap techs, the companies like Amazon, Google, and other large mega cap techs like that. We don't invest in those type of companies. Instead, we invest in a lot of those companies like Amazon, Google, Meta, and Microsoft. They're investing their money to really build their data centers so that they can access them and really build these cool AI applications. And so what we're investing in is all the publicly traded companies that are helping build those data centers. So it could be the builders of data centers or the builders of electricity generation. We're also investing in the companies that are actually housing the data storage, the data inside of these data centers that is being accessed to create all of these cool AI applications. Whether it's if you're just checking and you're sending an email and you're trying to figure out a better way to word it or get it have it be edited, or just creating some cool image, or just doing something else, trying to come up with a joke, I guess a dad joke or mom joke, whatever it may be. Yeah, it's all that comes from data from one of these data centers. And so there's a bunch of publicly traded stocks out there that we are looking at to invest in that will benefit from this AI revolution. A lot of people call it the fourth industrial revolution. A lot of people say AI is the future. It's going to be the future economy. And so there's a lot of ways to invest through just simple publicly traded stocks that are going to benefit as demand for AI continues to grow.
Yeah. Wow. What's your thoughts about I mean, is AI generated or AI generated plants and the need take up a lot of supply? Is that of natural gas or is that of oil or both?
Yeah, no, that's a good question. So the electricity, I'm glad you mentioned that, Jay, because I didn't talk about that. You're right. So one of the core elements of AI is like, as you highlight, you need electricity. You need electricity. So what we think is that electricity is going to be the new oil. So if AI is the future, electricity is the new oil. Natural gas and nuclear longer term, but natural gas in the near term is going to be the near term answer to be the energy supply source to generate a lot of this electricity.
Right.
So as you probably know just as well as I, there's a massive need for electricity. Electricity demand is going to grow by 75% between now and 2050. So we're going to need a lot more electricity generated. We've got a lot of natural gas in this country. There's a lot of natural gas that's been discovered, and a lot that's yet to be. And there's been a lot of great engineers and people in the oil fields that have done a fantastic job of finding low-cost natural gas. And the U.S. is able to capitalize on that now and generate low-cost electricity. And so because the U.S. has this foundational low-cost electricity, we can become AI dominant. So this is a big deal. And so what we think is going to happen is, that natural gas is going to be the primary fuel supply source to obviously generate the steam, to turn the natural gas turbines, to generate the electricity. And so there's going to be a lot of natural gas that's going to be consumed over the next several decades as AI develops.
Yeah. Boy, I tell you, once you think, okay, well, we're going to be good with oil and gas, or the demand, peak demand's here for oil, period. It's going to start going down for demand. If something else comes up and it's all of a sudden, we don't see peak demand for oil. It's going to continue to go up as natural gas is. I mean, I'm really shocked that natural gas prices are still at $3 or whatever they are, but they were a lot less, some time ago. But I tell you what, it's really growing a lot. The need and the supply. I mean, everybody out there knows. I mean, pretty much. But if you don't, the price of oil goes up because of supply and demand. Your gasoline, when you go to the gasoline pump and you pump gas, it's going to be more on Friday afternoon at 5 o'clock than it is on Thursday at 11 o'clock in the afternoon, because it's supply and demand and how much oil and gas is needed at what time. And that's the only reason why the price of oil goes up and down, is because of supply and demand and what people are thinking. That's why I think that oil prices will go up significantly next year, because Permian companies are not drilling as many oil wells in West Texas in the Permian this year as they did last year. I mean, it's down 30-40% in wells that are being drilled in the Permian this year. And because these shale wells, S-H-A-L-E, because these shale wells decline so fast that it's like they're going to decline fast, and we're going to have less wells on the market. So we're going to see a significant decrease in supply next year, and we won't have that supply necessary. So either we get it overseas, which we don't want to do, or we don't get it, which means the price will go up, 2026, 2027. So, but that's the only reason why it goes up and down. That's why I'm asking these questions, from Rob, just to see exactly what he thinks about that. Now tell me more about geopolitical tensions when you think about supplying, because when these data centers come in, like you said, 75% by 2050. I mean, these supply for oil, natural gas is going to be, increased significantly. What does geopolitical have to do with it, or does it play a factor in it?
No, that's a good question, Jay. I guess the good news is, because the U.S. has so much natural gas, and we're energy independent. So we have actually so much natural gas in the U.S. that we produce that the U.S. actually exports. So we use all the natural gas that we have in the U.S., and then we produce some more, and we export that all over the world. Right. And the U.S. is the largest exporter of natural gas in the world. So the great thing about that is we don't have to rely, as you highlighted, you don't have to rely on foreign sources of energy supply for natural gas. And so if a lot of these data centers and this electricity is generated using natural gas, then the U.S. is in complete control over the pace of development of at least the natural gas supply and natural gas electricity from an energy supply perspective. Now, Oil's a little different story, as you highlighted. Oil, we'll see where oil demand goes. Would agree with you that oil, people don't realize this, but oil actually is still the largest energy supply source in the world. It's the largest. It's bigger than natural gas. It's bigger than coal. Now, but the growth in oil demand is slowing. It hasn't peaked, but it's slowing. But what we look at the way we look at it is very similar to how you just articulated it, Jay, is that U.S. oil demand is probably going to slow down this year. And that's going to mean, we'll probably see lower prices temporarily. But then what's probably going to happen is the price of oil is probably going to rise back up into the 70s at some point. It could be next year. It could be the following year. And the reason for that is because if you look at what's happening globally, geopolitically, we keep our eye on that very closely, because right now oil prices are going down, in our opinion, because OPEC, countries outside of the U.S., are increasing production, right? And they've increased production so much that we now have a supply glut, temporary supply glut of oil. That will be fixed. That'll be rectified sometime in 2026, partially because demand will probably go up for oil because of low prices, and U.S. supply, as we just talked about, will probably fall. But then going forward, global oil demand will continue to rise, and you're going to need oil from the U.S. as well as other countries in the world. Now, what could change all that is this is a long-winded way to say, yeah, if Russia's the third largest producer in the world. If there were sanctions that were implemented on Russia that reduced Russian oil exports, well, that would reduce a significant supply source of oil on the market immediately or very quickly. That would change the supply and the supply-demand dynamics very quickly, and would likely cause the price of oil to rise pretty significantly.
Mm-hmm. Yeah, if Trump has anything to do with it, man, he's saying I'll put tariffs on anybody and everybody there is that gets in his way of India buying Russian oil, or there's just so many different things. There's so many different factors, and how much oil is in these countries, you really don't know.
Right.
But they need oil income. Obviously, that's their biggest source of income, and they own the whole country. It's like the country owns all the resources, and that's why the people at the very top get so rich, because they're producing 5 million barrels a day or 6 million barrels a day. It's all their money. It's all the government's money, or these top people's money, and so that's why there's so much. I mean, it's only like $7 billion a day. Is how much? It's 100 million barrels a day around the world, and if oil's at $70, that's $7 billion a day. How much is that a month? I mean, that's times 30. That's 200. I mean, it's like there's just so much money that changes hands every day that people obviously get greedy, and if greed's involved, you never know what happens. So, but anyway, let's just talk more about Tortoise and what Tortoise does. And when I first heard that name, I was like, okay, Tortoise, does that mean that you're the best because you're slow and meticulous, and who came up with the name, and what's the logo, or what is it that do you have a turtle that is your logo? And no, I'm just kidding.
Well, you remember us, right, Jay? You remember us.
Absolutely.
So our name, we have to give credit to one of our former founders for that. One of the original founders of Tortoise, who's no longer a founder, but his name was Dave Schulte. He founded, and his partners founded Tortoise back in 2002. And I think if I recall the story he told me, that was one of his favorite animals. So the tortoise. So that's how he came up with the name. Now, what the associated with it was steady wins. That was the main tagline for our original Tortoise. And you're right. It wasn't that we were slow in our decision making. I think we're pretty fast, but we'll let other people decide that. But what we were investing in at the time was all energy infrastructure. And if you think about energy infrastructure investments, steady wins was the perfect mantra for that type of an investment, because effectively with energy infrastructure investments that we're investing in those publicly traded companies, cash flows are very consistent. They're very steady because they're fee-based cash flows, right? Infrastructure investments in pipelines is what I'm talking about.
Oh, yeah.
Companies A lot like, you're sitting in Dallas. Energy Transfer is a big one down there, big one in Dallas. They own these these pipelines that traverse across the U.S. You never see them, you never hear anything about them, but these pipelines are really important because nothing works without energy. And where the energy is produced and where it's consumed are two different places, often two different places. And so you need these pipelines to bring the production to the end user. And so we invested in these pipelines. They were steady, consistent, stable cash flows. So that's why we said it's steady wins. They provided a lot of income and still do provide a lot of current income to investors. They provide some growth. And we've always thought that when you look across the energy sector, you always have to be, you need to pay attention to what you're investing in, because some investments in the energy sector have more commodity price exposure, and you may want that at times, but infrastructure has been always steady and consistent in terms of its cash flows, and that's what we've always liked. And I've always, and really at Tortoise for the whole time I've been here, have thought that the best risk-adjusted returns, where do they come from across the energy sector? Well, it's in the energy infrastructure sector.
Yeah, I agree with that. There's unless you do the commodity risk, like you said, there was a fund here in town. I can't remember who it was, Barry Davis or Ray Davis or some of the guys, but their company was, we'll just take the money. Every million cubic feet of gas, we want a certain dollar amount, and that's it, period. And this is for getting, when we drill an oil and gas well, and I'm talking about King Operating, we're an upstream company where we drill for oil and gas. And then when we drill it out there, we look around and say, okay, where are we going to sell this? And especially gas, because you can't do anything with gas except put it down a pipeline and then find somebody that will take the gas. And so it's not easy when you're out in the middle of nowhere, like they said on Landman, with Landman and Billy Bob Thornton. It's way out in the middle of nowhere. What do you do, and how do you do it, and how do you make money off this? So you have to find a way to put gas in a gas line and take it to market so you can sell it. And that's what he's doing, and that's what you guys did. Was, either I'd have to pay for the pipeline, or you'd have to pay for the pipeline, or if there was any competition, that was great. But people made the most money was there was zero competition, and then they locked in at prices saying we'll take 10 cents, 20 cents, whatever the case may be, for every MCF that comes through. And so they would get paid. Sometimes companies that came in business in 2008, 9, 10, 12, they did the commodity risk where they got a little bit of money for every MCF, but they said, but we want the upside, where we want that. If it's at $9, 10, 11, 12, man, we want to make a tremendous amount of money. We want that commodity risk or exposure. And then when things went back down to $1, they were like, wait a minute. It's like we changed our minds. We don't want that commodity risk. That commodity risk is for the big boys. We just want to get paid, for digging these pipelines all over the place, because it's a great business, but it's very expensive to dig gas pipeline and put it in the ground and have it go for miles and miles and miles, because it is something else. And you can also have that for oil, or you can have gas lines or oil lines, but it's easier for oil because you can truck oil. You can literally put a tank battery, which is what my grandfather did when I was growing up with him. That's what he did, is he was a pumper, and we'd go up on tank batteries, and their oil would come into the tank battery every day. He'd go by and measure it, and then put some liquids or acids in, but then he would treat the oil every day. But then when it got to be 180 barrels is what that sold for in East Texas, every time it got to 180 barrels, he'd call the tanker truck and say, hey, come pick up the oil. It's 180 barrels. Then the tanker truck would come out and pick up the oil. And then he'd call back every time it came up to 180 barrels, because that's what the truck carried. So it's a little bit different commodity risk or risky for oil than gas. But, gas, you definitely want to have a gas pipeline. That's part of your due diligence questions that we learn early in life. When you drill a well, I drilled a well one time up in Montague County, and I hit a well. It was a barn burner, and they said this guy, this retired guy that Charles May up there that worked with a lot of big names. He looked at me and he said, "Okay, hey, where's the pipeline?" I said, "The what?" And he goes, "Where's the pipeline?" I go, "Man, I don't know, man. There should be all everywhere." And he goes, "Well, I got some bad news for you. You know, you're gonna have to dig like a 4-mile gas line if you're gonna sell gas." So we had to do it, but it's part of, like I said, part of the due diligence. You should ask that question before you go drill wells or buy a prospect, you know, for sure. You know, Rob, what are some of your examples, good examples, or best wins in this industry? What are some good things that you've learned, or what are some big wins for you and Tortoise, or just you yourself in the industry?
Yeah, well, you know, some of them were we were benefactors of some of those great pipeline operators you mentioned earlier. Ray Davis was one of the founders of Energy Transfer with Kelsey Warren there in Dallas, right? I mean, we've been investors as publicly traded investors. We're not operating the company. We leave that job to the team at Energy Transfer, but they've done a fantastic job of building this pipeline network over the years. We were investors when it was a propane company, prior to becoming a real powerhouse in energy infrastructure. Similar thing with Barry Davis. He was at Crosstex Energy. He and his CFO Bill Davis. We were investors with them early on, and they were building out this pipeline network as well. You know, really, Jay, what we recognized and really benefited from was really the U.S. becoming the largest producer of oil and gas in the world, the shale revolution. I've been in, you know, that started in 2005, and I don't think I know that shale technology doesn't get the credit. It's really underappreciated, the impact that it's had, and all of the oil and gas it's produced. And obviously, you probably have a lot of your listeners that do this job, the hard work, and it's hard work. I recognize that, but it's because of all these oil and gas producers, these independent oil and gas producers in the U.S., that the U.S. has positioned itself as the largest oil and gas producer in the world, the largest energy exporter in the world, and that is significant going forward. And so we've recognized early. I always like to try to find, as an investor, you kind of like to find what I'm going to call diamonds in the rough, companies that nobody knows about that they should know about. And Energy Transfer was one of those for us at one time. Cheniere Energy, now that's the largest exporter of liquefied natural gas. Believe it or not, although everybody knows it now, it's a household name, but you know, a lot of people didn't know what it was just a decade ago, and we're confused on the company. So it's those type of things that we've done, and now we think, you know, with this AI infrastructure opportunity, we're finding other companies out there that nobody knows about, but they're going to know about them in the not too distant future, and we're investing in them before that, because that's where the puck is going in the energy sector, and that's what we're trying to do for investors, is figure out where the puck is going and then build a portfolio of investments, and then let the shareholders of the fund benefit from that.
I got you. So are you a public company or a private company?
So as a management company, we're just paid to, so we're a private company as a management company, but the funds that we have are all publicly traded companies. So for instance, our flagship fund is the Tortoise Pipeline Total Return Fund. It's TORIX. You can find that on, Schwab, Fidelity, wherever you buy any stock. Same thing with our AI. You can buy our Tortoise AI Infrastructure Fund is TCAI. You can buy same type of thing there. We have an active ETF called our Tortoise Energy Fund. That's available as well as an active ETF. TNGY is that ticker. So all of our products, and then they're on our website, tortoisecapital.com as well, but they're also all available to be invested in through publicly traded vehicles.
Yeah. Hey, let me say this real quick, and I want to go back to that. But I want to make sure that we talk about one thing real quick, and that is what you said earlier about what the shale revolution has brought to the United States. Because, I mean, somebody said, if we quit fracking in the United States, that we'd be done with like 7.7 million jobs, $1 trillion off our GDP. It would be devastating to the oil and gas industry right now that if we did stop fracking. And I know there's some haters out there for fracking, probably not listening to this show, but there's some haters out there that are out there that have talked about it. Thought, hey, well, man, why is fracking so? And it's like the Permian Basin itself. In Midland, Odessa, went from 1 million barrels 2005 to 5 or 6 million barrels a day every single day. I mean, there'd still be vertical wells out there right now. They're drilled and they start off at 100, 120 barrels a day, and they go up to, 10, 12 barrels a day after 3-4 months. That's just the way that's why we got out of it. We sold a bunch of leases in the 1990s because of that, and early 2000, because it just wasn't economic for us. And all of a sudden, they decided to go horizontal, and then they do this fracking, and they open up the pores and hit the shell, the Wolfcamp shell, and go horizontally fracking, and all of a sudden, we got 5 or 6 million barrels a day. We'd still be producing, as a country, we would be producing so much less oil. Oil prices would be, I don't know what they'd be. What do you think they would be if we didn't have, we did not have fracking? Where do you think oil prices would be right now?
Yeah. Well, no, I'll answer your question, but Jay, that's why I say, and you're exactly right. That's why the industry is really underappreciated. Yeah. What would oil prices be? I mean, think about it. The U.S. is the largest energy producer of oil and gas today in the entire world. So what would oil prices be if we didn't have, the 13 million barrels, almost, a large portion, if not almost all, come from oil and gas, fracked wells? Well, probably well over 200. It might be $500 a barrel. It would be outrageous.
Yeah.
It would be a high price. I mean,
Yeah.
You're taking away, 13% of the global demand would be gone. And so the U.S. And the fracking industry and the U.S. oil and gas industry, is really, it should take credit for low energy prices, not only domestically, but globally as well, because there's so much oil and gas in the U.S., that's helped keep the prices down. And so that's been a positive. It's helped for inflation.
Absolutely.
It's just helped for all of us in our pocketbooks. And so it's just giving us more discretionary income ultimately. And so, yeah, there's a lot to be appreciative of the oil and gas industry, really over the last 20 years, but we're not done. In some ways, it's just getting started, because the next couple decades with the need for more natural gas and electrification and all these things that are going on, AI infrastructure, huge opportunities here as well for the industry going forward.
That's true. And Dan Stamen's an economist in Houston. He did say that we'll never hit peak oil demand. And I don't know how much I believe that, but I mean, I don't know, but I know that he's a pretty smart guy and a lot of facts behind him. But even if we did see a moderate decline, I mean, okay, so the United States uses 20 million barrels a day. That's our addiction, as George Bush said at one time. Our addiction to oil is 20 million plus barrels a day. We produce 13. We can only refine of the crude oil that we need about 12 and a half. So we're exporting, but we still need 7 million, 8 million barrels a day imported. And I see where all this gets a little confusing, but at the same time, we do need good oil, and we still need to import oil. And so it's a never-ending cycle. And just think for a second that if we didn't have shale, and I'd have to do the numbers on the Permian, but just take away 5 million barrels in the Permian. I know it's producing more than that, but let's just say we take 5 million barrels away there in that shale, and just all of a sudden there's 8 million. And so that means we need more oil. We would need a lot more oil than that. So therefore, once a country has you by the whatever the shorts, if you will, and they know it, then they'll start charging you more money. So they're very pissed because we've had this shale revolution in the United States, and we're drilling for oil domestically, and we're making money. And so that's why they put all this oil in the market to lower the price, so we'll quit drilling. And they're doing that right now. The reason why oil went negative back during 2000, COVID 2020, is because they started putting a lot of oil on the market, and to put oil on the market so supplies would go up and demand would stay the same, and all of a sudden we'd oversupply, which means prices would go down. And then COVID hit at the same time. So it was just, crazy. And it took a while for prices to come back. But they're always going to come back. It's going to be something that we'll see good from oil and gas. Now, I do agree that the shell with the Wolfcamp and the Permian Basin is, if you need to pay $20,000, $30,000 an acre to acquire leases, and you got to go drill wells in there and make a profit, and it's hard to divest assets, yes, that's a very, very hard investment. But if you have something that is where you're not paying all this money up front, you have some natural gas, you have some assets like we have in Amarillo. We have that 60,000 acre Bivens Ranch up there. We also have the Panhandle that we've been very experienced in, which we like drilling up there. And we have some part of our non-op fund, if you will. So we have a Sprayberry Permian fund. We have 4 funds, and we try to grow these with equity and debt, and then sell them in the future. So that's kind of what we do, and that's kind of what Tortoise looks at, those kind of investments. Which I see where you're coming from. You're a management company, with these different funds that you have, kind of like King Operating is the same thing. King Operating is an operating company, and then we have our different funds that we manage. But and great job on the Ray Davis. Some of these companies have really just killed it, and seeing that was great. So I'm assuming that you feel like the same thing's going to happen with AI that happened with these big natural gas companies, or these midstream companies. You feel like the same opportunities there?
Yeah, we think could be even bigger opportunity there, Jay. If you think about it, just because obviously the oil and gas business is a big one. AI could extend even further, right? And I think really the expectations from where AI could go is from an application perspective. It seems like the sky's the limit, and we'll see how that evolves. There's a lot of but that said, I think what we can be confident in is that the AI is going to be the future, and you're going to need a lot of infrastructure. You're going to need a lot of data storage devices. You're going to need a lot of network switches. You're going to need a lot of air conditioners. Yeah. But you're also going to need a lot of natural gas, and you're going to need a lot of gigawatts of electricity. So there's a lot of positive things that AI is going to contribute to in terms of the economy, but also for some specific investments as well.
Yeah. Well, and I was listening to CNBC and Brian Sullivan, and he interviewed the Cheniere CEO, chairman. Yeah. And they said they're going to like double their amount of tankers that they have pretty soon. Not pretty soon, by 2030 or something, they're going to increase it substantially. The need, because he feels like that we will start burning more natural gas here, but he also feels like that the European countries will also increase their LNG capacities. And so he's putting a tremendous, billions and billions of dollars in Corpus Christi in infrastructures to import LNG. LNG is the natural gas that they liquefy, put on a tanker, and send it overseas. And they're buying a tremendous amount of it. India, China, all these countries are buying it for tons of money. And we're producing it here for $3. It was $2. Now it's $3. And so we're able to produce it a lot less here and ship it all the way over there and to make a profit. So pretty good. What's one misconception about energy markets that you wish more people understood?
Yeah, that's a good question. Well, I just think people, I think they should just understand how important energy is. I think you take it for granted that your lights are going to turn on every day, and it's more than just that, though. The home you live in, the carpet that you walk on, the desk that you sit at, the toothbrush you use. Basically, if you just look around wherever you're sitting now and look around and do a 360-degree turn 365-degree return. Everything basically is probably the foundation of everything around you has something to do with oil and gas.
Yeah.
That's pretty simple. And a lot of people say, "Oh, well, you're just an oil and gas guy." And at Tortoise, we're more than that. We're energy people, and we focus on the whole energy sector. We've chosen oil and gas because we look at every single energy technology out there. And let me tell you something. For the last 20 years, and probably for the next 20 years, natural gas and oil are the most cost-effective, the most efficient forms of energy supply. And it's just hard to replace them. And so that's why we end up at Tortoise focusing our efforts on oil and gas. And like I said, everybody benefits. I mean, you don't really want, what everybody wants for their energy costs is what? Well, low cost energy. We can't really differentiate that much between what level of gasoline. Yeah, I know maybe you're in your fancy car, you need to put in a higher octane gasoline than your not so fancy car, but it's a little different, but not that much different. So the only thing that what everybody wants when they buy their energy is they want to pay the lowest cost they can. You want to pay the lowest cost you can to heat your home, lowest cost you can to drive your car, lowest cost you can for consumer products that you're buying. Well, the best way to do that is have low cost energy. And that's really what people don't understand. And what they don't appreciate is the fact that shale oil and gas has led to low cost energy for a long time. And it's going to lead to low cost energy for a much longer period beyond this. And that's going to be one of the most foundational and most impactful things that is going to happen as we look to grow economies both domestically and globally as well.
Yeah, that's true. Very, very true. You know, I heard this quote once, and they said that if you look at a barrel of oil and you break up a barrel of oil, a third of it's going to be for gasoline for cars. A third is going to be for jet fuel and construction trucks, industry, institutional, things like that. The other third is going to be plastics, lipsticks. I mean, all the other things. And just think about that for a second. How many different cars? I mean, look over here on my left shoulder. All these cars driving by here. There's as much of gasoline that's used in these cars, all these cars around America, and there's as much going into other products. So even if we lost every car on the street, every single car on the street right now today, we would still need 2/3 of it for other products. You know, so it's not going away anytime soon, obviously. I need to wrap up here. I know I only have a certain amount of time with you, and I wanted to make sure that we caught it up. I guess Jordan had her meeting and couldn't jump on, so sorry you couldn't meet the personality of the show, Rob, Jordan, but maybe next time. But we do these 5 different questions, and I don't know if have you heard the questions before that we've done?
I have not, so I'm looking forward to it.
Here we go. So what book are you reading right now? Any particular book you're reading?
Oh, I'm reading a book about the history of J.P. Morgan. Basically, my daughter just started work at J.P. Morgan, so I'm reading the book about the history of J.P. Morgan. Good.
What's the biggest thing about him that you like so far?
Well, he was definitely a capitalist, so I like his approach to capitalism.
All right. Any particular show you're watching right now? And I mean, book you're reading. I'll answer that question too. I just started this book called "Bury Me in a Dirty Suit," and he's a Christian that was at the World Trade Center. Matter of fact, he was in World Trade Center 7, the 7th building. There's 7 buildings around. This was across the street. But when number 1 was hit, World Trade Center with the airplane on 9/11, he came across and started trying to help people. And then when the second one was hit, that was when everything went crazy. But he's a Christian and talks about his life and going through that 100% and all the different things that happen. So I look forward to. I'll come back here next week talking about the book and a little bit more. I'm on chapter 4 right now, so I really don't have a lot, but I'm getting a lot of the new stuff out of it. So that's pretty good. Any particular show you're watching right now?
Well, I'm not watching it yet, but I just thought I should check out The Paper. I love The Office, and I heard The Paper is supposed to be pretty interesting on Peacock. So I'm going
There
to
you
check
go.
that one out.
All right, good, good. I'm trying to get my wife to finish out the Netflix Jerry Jones the Gambler with the Dallas Cowboys. I have not. She's not been. I would watch the next 3 episodes. I've already gone 3 episodes. I think it's 6 episodes, but I haven't done. I've done 3, and I would go back and watch those 3, but I won't go back through 6. So I'm trying to get her to talk her into it. Any particular podcast you're listening to?
Podcast? Let's see. Oh gosh. I would say, what do I listen to lately? I mean, I listen to some of the CNBC podcasts, I guess. So anything they've got going, I like to hear what other investors are saying about opportunities in the market.
Yeah. A lot of people get their news from X, Twitter and X and all that now. And I think that's one thing that there's a lot of great information on X, and which is good. But I don't know if there's really a podcast in particular I'm listening to right now besides the Jay Young Show. You should always check out the Jay Young Show.
That's right.
You never know what's going to happen. You may have some incredible guests like Rob Thummel on there. You never know. Let's see. Word of the week. I did word of the week. I do word of the week and an inspirational Bible verse every week. And so this week, the word of the week is compassion. And I got that from this book, Compassion. I got that from this book because I'm just like, man, you're talking about bury me in a dirty suit, compassion, and talking about getting things done and not thinking about what else there is. I don't have a choice. I'm going to get this thing done because a lot of things had to get done during 9/11. Unfortunately, 400 people that were service providers that went back into the 9/11, the World Trade Center, did not come out, and it's just incredible. But the compassion that they had, and just the compassion is a good word. So that's my word of the week. Is there any word of the week that you can think of right off the top of your head? What's your favorite word?
Oh gosh, I haven't thought about that hard. That's a tough one, Jay. I don't know. I just I'm all about dedication and commitment. So those are probably my best words.
There you go. I like those. Dedication and commitment. I may have to use those next week. I don't know, but hey, I like it. I like dedication and I like commitment. Kings or inspirational Bible verse. I'll read the Bible verse off the second chapter. It talks about Jeremiah 29:11. For I know the plans I have for you, declares the Lord, plans for welfare and not for evil, to give you a future and a hope. So taken out of the book, bury me in a dirty suit. This guy is just really incredible. He's a Secret Service guy, Darren Kinder, and I really like that Bible verse. So that's gonna be the Bible verse for the week. And is there anything else you want to share with us, Rob, before we go?
I don't think so, Jay. I think it's been great. Thank you for inviting me. Great. I'm happy to be here, and hopefully we can do it again sometime.
I'd love to. I need to catch up on Tortoise. I think you can just go and I don't have to be a multi-billionaire to invest in Tortoise
That's right.
funds, right? It's a mutual fund, so $1,000 I think I can get in on a Tortoise. $1,000 on the mutual funds. There's open-ended and closed-ended funds. I don't know which one's better. I don't know. Everybody has their opinion, but look over the track record before you invest. But we definitely recommend Tortoise Capital, and I love the name. I think it's an incredible name. I think it's always it's better than the hare, right? Tortoise and the hare. Right. I'll take the tortoise every day long. I mean, that's kind of like our business, with our business, and if we can just invest in, get singles and doubles. Just singles and doubles. You may have a triple every once in a while, but just drill wells in areas that there is oil and gas, and so you're not taking high risk. Our last fund, we did some high risk. It didn't work out. We kept trying and trying. It didn't work out. We're not going to do that anymore. So we're only going to drill in places that we feel very comfortable in producing oil and gas. And like I said, it may not be the 200-300% a year, but that's okay. We're okay with just drilling in good areas. So we have a great team that does that. So very happy there. But anyway, Rob, thank you so much for showing up today, man. I really enjoyed our conversations, and we need some money, so we'll definitely hook you up after this. No, I'm just kidding. Any oil and gas guy that say they don't need money, I don't know what's wrong with them, but every oil and gas guy always needs money, and it's just what kind of risks do you want to take, and what to do. But like I said, we're not in the risk business. We're just in the singles and doubles, and maybe we could work something out. If not, I bet you know somebody that does our kind of lending, and we may work something out. So that's what it's all about: networking and having a great relationship with people. So, Rob, thank you very much for coming on, and we'll be checking with you later on. And until next time, everybody, thank you very much for showing up. It's the Jay Young Show. Thank you.